Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the earnings of a energy giant Chevron, which has presence across the world. It has its operations on multiple continents. It is a major producer of the crude and liquefied gas. It is also has some side projects which are not that big from the revenue perspective, but it has presence in fabrication work and related activity. And in today's session, we are going to consider its earnings report for the fourth quarter of fiscal year 2023, which was released way back in February. We will see its earnings and what is happening on that front. Along with that, we will also take a look on its recent price formation to see if there are emerging opportunities for us to trade and invest. First, we will consider the quarterly report. If you look at the highlights of the earnings report, the first thing you will notice is this difference of the reported earnings of US dollar 2.3 billion, but then the adjusted earnings are of US dollar 6.5 billion, and that is because there have been two significant items which have caused this difference. There is 1.8 billion US dollar upstream impairment charge, and there is US dollar 1.9 billion of decommissioning obligations, and these two are major contributors to this discrepancy, and also the key factor why the Chevron's earnings have plummeted from the fourth quarter of 2022 to fourth quarter of 2023, because in the prior year its net earnings were more than $6 billion, and now if you look at its last quarter's earnings, the net profit was this of US dollar 2.3 billion, and anyone will wonder what has happened to the company that its profit have not only halved but gone down almost 60 to 65%. But then, if you consider these two items which are causing a significant impact because of the reporting requirement, then you will notice this key difference. And as things stabilize, I think in coming quarters, once these charges have been recovered, we will get the earnings of the Chevron back on track. So that is expected. Now, if you go through the earnings report, you will have these all the details provided to you regarding its productions and its sales. The key thing to take note of is that its production is on the record high. The worldwide and US net oil equivalent production is on the annual record, and it is also expanding its operations. So not only it is achieving this high, but it is likely to keep getting its newer and newer record highs in coming quarters as well. It has also reduced its debt by US dollar 4 billion. One key highlight is its returning of record US dollar 26.3 billion in cash to the shareholder. This is also a new record for the company and highest ever return of value to the shareholders. It is distributed under two heads: the dividend payment and share repurchases. For all the details, you can always access its quarterly report, which is available on the Chevron's Investors Relations page. So I won't take you through all the details of its earnings report, which you can do at your spare time. The focus of this session is simply on the top line and the bottom line and some key changes in between. So we now straight away head to the quarterly earnings statement, the income statement, and afterwards we will consider the cash flow statement to see what are the activities which are generating cash and where the company is spending its cash. This is the consolidated statement of income for the quarter ended December 31st. The total revenues stood at $47.18 billion, which is almost 20, not 20, around 15 percentage point lower than the earnings, than the revenue of the fourth quarter of December. Fourth quarter ended December 31st, 2022. And if we consider this difference, you will see that it has also had an impact on these net profit, with the net profit also being significantly lower. But if you consider the prior quarters, that is the second and third quarter, the thing seems to be stabilizing, and after the initial decline, we are seeing that the Chevron is pretty much on track to eventually get back to where it was in its revenues and net profits. The Chevron is quite confident of being able to achieve these prior numbers, but it will be interesting to see when it is able to achieve that. It has also given you the earnings breakdown by major operating areas and the profit generated therein. Its major revenue share comes from the upstream activity, that is direct retail operations. And if you look at this, it has suffered significant loss of US dollar 1.3 billion in the upstream activity in the United States, and that is because there has been a big impairment charge, and that has contributed to this negative number from the United States. And if you compare it to the prior year, you will see the difference. Otherwise, its upstream revenues from the international market have grown. Only slight growth. This is not much of significance. The downstream revenues are on the profitable side for the United States as well as for the international operations, but the downstream revenues are significantly lower from the United States. Overall, it has its net income of US dollar 2.2 billion. This is one of the biggest company by the revenue as well as by net profit. Its market cap is not that high, but if you see, there are not many companies who make more than 2 billion of net profit in a quarter, and very few who make more than 6 billion of profit in a single quarter. We now consider its cash flow statement. The operating activities provided US dollar 12.4 billion of cash, and that is not very different from the prior year's numbers. And for the full year, the cash generated by the activity stood at US dollar 35.6 billion. Now, this is a big change because if you look at the 2022 number, then it was significantly higher, almost at US dollar 50 billion. So that is something which the company's management is going to be aware and mindful of and take the steps to recover these cash generations to the prior year's levels. Out of these 12.4 billion, the company spent US dollar 4.1 billion on the investing activity, and this was broadly the capital expenditure of US dollar 4.4 billion, and then there were proceeds from the sale of assets and returns from the investment of 300 million. Coming to the financing activity, the Chevron used US dollar 6.2 billion for the financing activity. Out of that, the share repurchase consumed US dollar 3.4 billion and the dividend payment of US dollar 2.8 billion was conducted. So this is simply the case of returning value to the shareholder in different forms, as there was quite a lot of cash surplus with the company. And after all the three key cash flow segments, we have the increase of US dollar 2.3 billion in cash and cash equivalent. And for figuring out the total cash at hand, all you have to do is look at the balance sheet, and for the quarter ended December 31st, 2023, the company's cash position is quite comfortable. It is sitting on cash and cash equivalents of US dollar 8.1 billion. So that is quite a good enough to meet any exigency, any immediate requirement, and that is why the company felt confident enough to return US dollar 6 billion in value to the shareholders in the form of dividends and share buyback. Now we turn our gaze to the technical side. This is the Chevron stock price for last few weeks. There is a chart using each candle period defined at hourly. So this is simply for the short-term trading analysis. If you look at the second half of March 2024, you will see that the Chevron spent considerable time consolidating close to the 150 to 155 price band, and after that, when there was not much of an selling pressure, it eventually took off, and now it is sitting close to its near-term high, and that limits our trading choices at the moment because it has already rallied. So that rules out any kind of short sell trade at the current juncture, because we don't really know where it is going to stop, nor it is going to be a good decision to go for a long trade now, given that it has seen a sharp rally only recently, and it can go into consolidation phase, or it can continue, or it can even reverse the course. So we have only 33% possibility of the Chevron continuing to grow, and that naturally makes odds unfavorable to a long trading decision at the current juncture. So we have to be mindful of that as well. So for short term, if your review is simply for next couple of sessions, I think the natural thing to do at the current price formation is to sit on the sidelines, allow it to consolidate first for next couple of sessions, and if it doesn't really decline much below these prior swing highs now, which are supposed to act as support base. So the price formation of around 157 to 158 is going to be quite important over the next few sessions. And if we don't really see price declining below this key price support area, then we can be fairly confident of the continuity of this ongoing rally and take our chances, so that even if things don't really turn out too bullish and the Chevron's stock price simply continues to oscillate in a range. Even in that scenario, we won't be losing much money. And if it rallies, then of course we will be making a lot of money. And in the eventuality of our assessment being wrong, we might suffer some loss. But if you go for a trade with a optimum risk reward ratio, then that will reduce your risk as well. Expanding the time horizon to make it medium term, I have turned the candle period to now daily. In it, you can see that after sharp decline observed in the share price of the Chevron after the end of 2022, it started to decline, and at one point in time, its share price was almost a 30 percentage point lower than its recent peak, and from this low of around 140 it has started to recover, and after spending considerable time, almost 3 months, hovering close to this 150 price band, it has now successfully broken that apparent ceiling and made this new high of 160, and that gives me confidence that this near-term bullishness is likely to persist. And if your objective is to look for trading opportunity in medium term, then the obvious stance needs to be tilted on the bullish side, as things are likely to remain bullish for the Chevron in the medium term, and as long as it holds the price formation above this immediate swing high, I am going to be fairly confident of its ability to rally. Chevron is a big company, its stock price doesn't really move much in a single day. So you will have to be patient and mindful of that fact as well, that it's a slow moving stock, and big jumps on either sides are not likely to happen unless there is significant development which impacts its workings or the business environment in which it operates. So for slow and steady rise, you can keep an eye on the chevron price formation, and in the next decline, next correction, you can keep looking for the consolidation, and as and when things starts to look favorable from the risk reward ratio, you can go for a buy on dips trade in the chevron, with the possibility of chevron continuing to rise, and in the course of time try to reach toward this prior swing high of around 170. Now expanding the time horizon further to the longer term, the chevron has been in a slightly bearish consolidation since making its high recent swing high of 189 way back in 2022. It has seen this change of fortune in a very short span of time. In these COVID days, its stock price had plummeted, but from there on, it recovered and eventually went on to rise towards 200 price level. Now, from that level, it has seen significant decline, and the ongoing process is of simply consolidation. And unless it makes a fresh swing high above the immediate swing high of 171, I will not really be feeling much confident about its longer term investment potential, because the price formation turns out to be of lower high and lower low if we simply look at this price formation over last couple of quarters. And that is why I feel we will have to go for a long investment decision after the new high is made, and in subsequent correction and consolidation, we get a good risk reward ratio. So that is going to be the wait and watch approach, because right now there is not much of a trading opportunity herein. Of course, you can keep looking for the short sell trade if the chevron gets close to the prior swing high and it doesn't really rise past that and instead starts to show the signs of impending decline. In that eventuality, you can even go for a short sell trade closer to the prior swing high. So that possibility is there, and I would keep my eyes and ears open for that possibility as well. So from longer term perspective, the things are looking slightly tilted to the bearish side at the moment, but it is not a trade which you can take today or at least for next couple of weeks. Things will have to be given more time for clarity to emerge, and if things turn out as per our expectation, if there is no swing high formation above the prior swing high of 171, then in course of time we can think about shorting it. But right now we will simply have to adopt a wait and watch approach and keep an eye on the price formation of the chevron from the longer term perspective. So that's my take looking at the price formation and its fundamentals, in which it is on a recovery mode. It is showing the signs of better days ahead, and only time will tell whether our assessment is going to be right or wrong. But it seemingly is on track to recover to its prior highs, both in terms of the revenues as well as its stock market valuation. Now it's time for me to sign off for the day. If you have found this session informative and useful for your trading decisions, do write to me the feedback and I would be more than happy to take the decision discussion forward. Do like and subscribe to the channel. You will have equally informative and interesting sessions hosted by me as well as other technical analysts on this platform. So do like and subscribe. Thank you all for joining in. See you next time around with a equally interesting company to work with. See you next time. Goodbye.